Start streaming. I'm gonna record too. All right. Since we are on YouTube, this is not investment advice. I am not an investment professional. Investing and trading is risky. Trade at your own risk. Talk to your financial advisors, etc., who are licensed. With that being said, let's get started, fellas. I always start with the macro first. We had a crazy last couple of weeks in the market. Things are falling, things are chopping all over the place. So yeah, man. So watch your head out there when you're trading, specifically. Let me move this. There it is. When we talk about stock market catalysts, you know what I usually do? I just type in stock market catalyst into Google. Um, and next week, the major thing that I see on the calendar, other than GDP, which is gross domestic product, which is like how good is the economy doing, jobless claims, what's the employment looking like, how many people are filing, jobless claims. This is one of those situations where bad may be good, because if the Fed's one of their mandates, and we talked about this a couple of weeks ago, is to keep maximum employment. So if they start seeing more jobless claims filed, then they may lower interest rates faster. And right now they're waffling back and forth as to when they're going to lower interest rates or whether they're going to keep them as high as they currently are. So that's why there's been a lot of, I would say, chop and volatility in the market recently. And then on Friday, we got PCE, which is key inflation data, one of the measurements that the Fed likes to track. So here are the forecasted amounts. It's like 0.3%. If that comes in hot at 0.4, 0.5, look for stocks to get lower. Oh, that's the index. That's PCE right here, 2.6%. My bad. This is like an inflationary reading that's different from CPI and PPI, but it is an inflationary reading. Right now, that's what the entire market is looking at, is inflation data. So if this comes in hot at 2.7, 2.8, we're probably going to keep going down. If it comes in light at like 2.5, 2.4, there may be a chance for us to get another bump in the market again, because what people are waiting for, once again, is for the Fed to decrease interest rates. If the Fed decreases interest rates, it makes it easier to borrow money. So a lot of these smaller companies in the stock market, if it's easier and less expensive to borrow money, they're more likely to do better. If not, there's going to be very few companies. The ones with higher margins are the ones that are going to survive and do better. But even Nvidia has been dropping, right? SMCI have been dropping over the last like week. So,
All that semiconductor, all that stuff.
huh?
All the AI and semiconductor,
Yep.
all of that stuff been going down. It's
My,
crazy.
my ASML got stopped out. I triggered my stop. I didn't lose anything on it, but if I would have held it, I would have. So that's why I keep my stops.
Yeah.
But stopped out at $0. So, and that Google trade is still up, but I'm kind of wary about that one, because on the macro side, starting next week, we do have some big companies reporting earnings. Monday, you got Verizon, just in terms of like the communication sector. Tuesday, you got Visa, you got the Tesla, you got Pepsi, you got GE Aerospace, which just like broke up into like three companies, but this is like the new biggest entity is GE. So you got a bunch of Texas Instruments, which is another semiconductor company, and is this Raytheon? And then Raytheon, right? So UPS, I'll just keep looking. You got UPS down here, Lockheed Martin, Chubb, an insurance company. So we're about to be neck deep into earnings next week, and we're really gonna see like what the market has. Like, if everyone is reporting weak earnings, don't be surprised if the stock market starts dropping, right? If everyone is reporting stronger earnings, then maybe we get a little bit of pop. But the main issue has been, uh, is the Fed going to be uh, Is it going to be reducing, or is it going to be dropping or cutting rates? If it's not going to be dropping or cutting rates, then we either going to have chop for a long time, or we're going to coast, or things are going to drop until we get closer to the Fed cutting rates. So Tuesday is a big day. We look at Tesla. What have I been telling y'all about Tesla the last couple of months?
Dropping,
I
dropping, dropping,
I
dropping.
hate it. It's just the technicals on the stock didn't look well. They didn't look good, and they haven't been. And then Elon has been all over the place, so that hasn't helped either. And then just looking
Somebody,
at some of the news, they just cut prices on their cars again. And so it's like that's going to decrease their margins in a time when they're selling less cars and there's more competition. So personally, I don't like Tesla right now. Maybe if it gets to 100, like I've been saying for months, if it gets down to 100, I might buy 100 shares. Because then I think it'd be at a really reasonable valuation at a discount to potentially take a chance on it. But right now, Tesla does not look good. And we'll kind of go look at the stock a little later too, right? You got Visa too. Wednesday, you got Meta, Thermo Fisher, IBM, ServiceNow, really good company I like. Waiting for that one to drop. Chipotle, Waste Management, General Dynamics, which is another war stock right now, given that that's been heavy in the news, the Israel-Iran conflict, which is another reason or a catalyst for the market to have been dropping over the last like week or two, is the Middle East conflict that's occurring right now between Israel and Iran. Thursday, Microsoft, Google, Merck, AstraZeneca, T-Mobile, Caterpillar, right? Intel, Honeywell. Like this, we're about to be in a thicker earnings. So don't be surprised to see some more volatility this week as we're seeing these massive companies, especially Microsoft and Google. These are two of the trillion. Microsoft is worth 3 trillion. Google, both of the stocks put together, is worth like close to 4 trillion, I think. Looking at that, $3.8 trillion, right? So these are two massive companies that are reporting. If they report great earnings, if they beat their estimates, market's probably going to be propped up a little bit longer. But if they see any weakness out of Microsoft and Google specifically, uh, don't be shocked if the market falls. And see, I still own that call on Google that we did, Isaac,
yeah.
and it's still up like 2 grand right now. But I'm thinking about, I don't know, man. I'm thinking about cutting it before it reports on Thursday. I don't know. I wanted to hold it long term, but the market's been doing crazy stuff, so I might cash out. Hope it runs into Wednesday right before earnings, and then cash out. I don't
Yeah.
know. I'm thinking about it. I'll let you know what I do. But it was a decent trade so far. Um, Like I said, what I've been using a lot lately is this software called, or this app called Koifin. You can go look at the US sectors. It's actually free. At least this portion of it is free. You can upgrade. I do not represent Koifin, but it's a really good software to just kind of show you what the market is doing. So here are the general markets, different ETFs over the last month, right? And then what do you see over the last month? Gold is up, metals are up, and oil is up. Real or regional banks are kind of up, but what else do you see? You see everything else is down, right? Chips are down 8%. Tech is down 6.6%. XLY, which is mostly Tesla and Amazon, is down 5%. XLV, which is healthcare, down 4%. Communications, Meta, Google, Disney, what else is big? Netflix, down 1.5%, especially as Netflix dropped the other day. Financials, down 1%. Industrials, down 1%, right? So what this is telling me is that there's a lot of weakness in the market, right? You see kind of what I'm looking at from a holistic standpoint of what the market looks like. Guys, you guys there?
Yeah,
Yeah, right.
yeah, yeah.
So if I'm taking anything long, the only thing I'm probably going to take long is going to be energy, metals, gold. That's about it right now. But if for me, from a sentiment standpoint, I'm looking more to short stocks right now, right? Put away the calls and maybe grab some more puts, especially if earnings tell us, that some of these things are going to be dropping. This might be the season to be a little bearish. We still are overall bullish. Like if you look, can we do year to date? This is where we are year to date, right? So starting from January. So we still are kind of overall bullish for the year, but look at all of these things just kind of dropping. And then if you're just looking over the last month to kind of see where sentiment is, like tech is down. In terms of what has been the worst, it's been semis and tech, and a little bit of tech in here too. So that's why I'm not saying that I'm bearish, but given what the recent trends are, I'm more bearish than I am bullish on a lot of these sectors. The only sectors I'm bullish on are energy and like gold. And then traditionally too, if gold is going up and gas is going up, usually everything else is going down. Right? So, and we're coming into the summer, into hurricane season with oil and gas and stuff like that. And then let's say Israel and Iran get into a broader conflict, then you're going to talk about them ships having to reroute and there be supply chain issues because a particular Gulf is cut off because Iran isn't letting ships through or something like that. So that's kind of what I'm looking at. Like, I'm not saying I'm bearish, but at least for tech right now, I'd be more likely to short tech than I would to be buying it unless it's at like a discount price. I might be taking a stab at something that's way down, but from a holistic standpoint, like the market doesn't look like it's in great shape right now. We're still, and when we look at the charts, we'll see we still are in an overall uptrend, but I might be buying some puts next week, at least from like the next week or two, unless we start seeing a bounce after these earnings, right?
Yeah, that's what it looks like. We're going to have to start transitioning to puts that it calls.
Yep. And so, just very simply going to Investopedia, what is a put option? A put option is a contract giving the option buyer the right, but not the obligation to sell a specified amount of an underlying security at a predetermined price within a specified time frame. And essentially, if you've heard of shorting a stock, this is kind of what they mean. No, well, this is from an option standpoint. You can short a stock directly, which is what we've talked about on Thinkorswim. In fact, let's just transition over there. So, how do you do that? Let's say Tesla. Let's look at Tesla. Tesla, we go let's look at a 5-year month chart. Tesla does not look good. Can we all agree?
Yes, sir.
Its high was $414. It is now at $147. It's way down here, right? And the nearest support that it had was around 165, and it just busted through that, right? So for me, like, I'm not looking at Tesla again until it gets down to this 106 range or even this 200 right here at like 94. So from like 94 to 106, or like maybe even a little higher, maybe like to 110. That's where I'm thinking about maybe hopping in a Tesla long term, because it's more discounted. It looks, it could head lower, but I think this company, along with BYD in China, Like if we're talking about EVs, because if we go look at Rivian, Rivian looks even worse. Look at that. It's terrible. Fisker, I think, is close to bankruptcy or may have filed or something like that recently.
I don't,
Look at Fisker. Terrible.
we can't we can't see it.
Oh, you can't? My bad. Hold on. Shoot. Should be. Oh, it should be doing my desktop. My bad. What about now?
Yes, sir.
All right. So let's go back to Tesla. My bad. I didn't know you can see it. Tesla, look, we're all time high is 414.5. It's at 147. So if we're looking at, see, I'm looking at where price has been in the past. It's bounced off that 106 area once, twice, and these are month candles. We're on a 5-year month chart right here. 5-year months. Each candle represents a month. So it's bounced off there right here, and back here, right? So you got some decent support right here at 106, 107. So if I'm looking to hop into Tesla, I'm gonna wait. I don't want it anywhere in here. I feel like we're in no man's land at least until you get to like 130, right? Because you got a little bit of support right here on these monthly candles. So until it gets to like 130, we're in no man's land. And I really want it, or would take a chance at it, a stab at it, at like between 110, maybe if it even gets down to the 290, 95. I mean, then we're really talking about Tesla at a discount because it'll be like what 75% off its all-time high. Will it ever get back there? I don't know. But if you're taking a chance at this as a swing, this is the range that I want to be at, and maybe keeping my stop just below this 200-day moving or 200-month moving average is what it is, right? Something like that. If we take it from a week standpoint, go look at the weekly chart.
I think in long term, if you get it at that price, eventually it should be going up. I don't see Tesla really going too far, especially since they're in the solar industry and all that.
Yeah, yeah, exactly. Over time, not just that, they're even creating robots and humanoids and stuff like that too. So, but that might be 5 years down the line. So for a stock like this,
aren't they getting more so in AI also?
well, yeah, they've been into AI. Not just that, Elon
Yeah.
was like one of the co-founders of
OpenAI.
OpenAI until he got into beef with Sam Altman, and that partnership was done. But Elon is always on the cutting edge. My problem with him is that he has too many things on his plate. Like, how many billion-dollar companies can you be the CEO of and run effectively? Right? Because okay, he's doing Tesla, right? He's the CEO of Tesla, and then he's the CEO of Twitter or X, and then he's also the CEO of the Boring Company. And then he's also the CEO of SpaceX, and then he's also the CEO of Starlink, right? And I think I'm missing one, right? That's what I was. So
Got a lot of stuff you're juggling.
yeah, and you're the CEO, not like the head of the board, but the CEO of all of them. It's hard to be head of the board of that many companies, let alone be the CEO and really be focused on it. So is he really focused on Tesla right now? I don't know. And then with all of the political stuff too, the people that buy Teslas, a lot of reasons that they're buying Tesla is because they're supposed to be carbon neutral, or right, like you're not supposed to be putting any exhaust into the air when you're driving a Tesla, right? And people that care about the environment, tend to be liberal. So why are you out there like pressing for Trump if your whole customer base is liberal? You know, even if that's what you believe, why are you out there saying stuff like that that's going to piss off your customer base and cause them to not buy your car? That's just my 2 cents anyway.
Yeah, that's true though.
So that's why it's like, from a Tesla standpoint, like that, those are the things that I don't like about it. I also don't like it technically. So when I say technically, what is the stock price telling you? We're on a 5-year week chart right now. So each candle represents a week. We're seeing lower highs, right? Lower highs. That's not good. And we're seeing lower lows, right? Especially If it gets below that 101 mark right here, Tesla could fall even further. But I'm looking for it around this area because there is some support if you're looking at these weekly bars here, here, and even here, where this 106, this 23.6 fib level is looking like decent support for Tesla long term. And so that's where, if I'm going to buy, that's probably where I'm going to buy. So right now, what I would do is right click here, create an alert. See if Tesla's at or below 110.
Oh.
Let a brother know. Right? Look to buy Tesla long term. Right? And then so that way I don't even have to watch it. I know that's my level, right? That's my level. If it gets to 110, Thinkorswim is going to send me an alert on my phone or through my platform that tells me, hey, Tesla is getting close to where you want to buy it, right? And I'm just going to watch it, kind of like I did with Apple the other day. Apple hit my level. I've been telling you guys I've been wanting to think about looking at it at 167. So I did. I bought it the other day. I didn't buy the stock though. I bought a leap on it. And
What's a leap?
a leap is a call or an option that is further out. So most people buy options that expire within the week, within a month. I bought an option that expires a year and a couple of months out. So I have more time for the option to do what I wanted to do, and there's less
What was
time.
your? Go ahead, my man.
And there's less time decay associated with it, at least right now, because it expires so far out.
What was your strike price that you entered at that? Because I meant to ask you about that. I did a long term call too, but I think I did it at a higher strike price.
My strike was the 95.
95. Okay, so you got
Deep
way
in the money. Deep in the
Yeah.
money. Because
Okay.
because it's more of the value. There's more intrinsic value than extrinsic value, which is the time decay, the deeper in the money you are. So this had a delta of like 90, 93, I think, when I bought it. But yeah, it's a strike price of 95 that expires June 20th of 2025, right? So I can give it some time to work. However, I'm still treating this kind of like a swing because I told you I don't like how the market is looking right now.
Right.
My stop is around 163.75, so I put an alert for 164. If Apple gets below 164 and drops below like 163.75, I'll cut it and just wait again, you know.
Well, it
But
did touch. I think it touched
it touched
maybe it touched
164.
163 at one point. Yeah.
No, it touched 164.08 and
Oh, was that the
bounced.
lowest?
Yep, and then bounced right here. If
Okay.
you look from right here, if I go to this chart or this candle, the low of this candle is, yeah, that last Friday was 164.08.
Okay.
And this is
So I
what
did the same type of leap call, but I ended up doing the strike price of 170.
Oh, no, that's close.
Same.
That's close to the money though.
Yeah.
So when I'm doing leaps, I want to be deep in the money, and they're more
Okay.
expensive, but now there's less theta on that option. You know, that's the reason why I want to be deep in the money, and then it's going to move more. It's going to mimic more of the stock price than being at the money where the delta is like 50, right? Where Apple needs to move $2 for you to make $1.
Right.
So me, if Apple moves $1, I make like 93 cents. You know, so it actually mimics the stock price a lot better. So that's why I'm deep in the money. They're more expensive, and they're more expensive because the probability is higher too. So,
Yeah.
but that's what I'm looking at right here. And so if that drops below, like if we get another red candle and we don't bounce, then I'm just gonna take my medicine, lose my couple $100. Like I said, a couple $100 of risk for a chance to make a few thousand up here, and then I'm just gonna wait a little bit longer for Apple, and then maybe Apple is gonna go to the next train stop, which for me would be around. Let me see what the monthly around 135.
Hmm.
That's like the next train stop for Apple. Like
Mhm.
if it keeps dropping and comes underneath like 160, then that's kind of where I'm looking at it. Because it doesn't have, I guess that 34 moving average, maybe 160. But if I took a chance right here, I'm done taking a chance on Apple until it goes a little lower. And then yeah, I'm looking in this range, 130, 135 to 130 to 135, and then maybe keeping a stop down here. And I might give it some more wiggle because Apple doesn't tend to drop that fast, that quickly. So if it gets down to 130, 135, I might just hold that unless it gets all the way down to like $100 or something like that. Um, just personally, because this would be a long term buy for me. At least, even if I'm doing leaps, it would be a long term leap where I'm going to hold this for like at least a year. If I buy the shares, I'm hoping to hold it for like 5, 10 years or more, right? Apple's having the same issues though, not selling as many phones in China, which is why it dropped on its earnings in the first place. And it's not really innovating anything, you know? It hasn't really innovated in a long time. Like what is new about Apple? You know, it's selling the same phone over and over and over and over again. So let's look at
Mhm.
Microsoft really quickly too. I know we're looking mostly at tech, but these are the stocks that people are most interested in. Microsoft hasn't been doing this well in the last month either, but if you see, it's still the strongest out there. It's bullish. All of its moving averages that are shorter, this is the 21, the 34, the 50, and the 200 on the monthly chart, they're on top of each other. If they're on top of each other, the shorter average is on top of the longer average. That is generally bullish momentum. Maybe we're just in a pullback. But this looks way healthier than an Apple, right? Not and Apple even looks
Mhm.
like healthy because you still got the moving averages on top of each other, but Microsoft just happens to be more bullish than Apple is, right?
Yep.
So if we go to a day chart, same thing. But this is what I don't like. This last week was terrible. Look at these red candles, red candles. And look at this shorter moving average on the daily chart looking like it's going to cross the longer moving average. That's what we don't want to see. That looks like the stock is getting weaker. But earnings, and if Microsoft blows it away in earnings next week, this thing is going to pop right back up to all time highs. So, but right now it's just kind of risky unless you're doing one of those stocks tend to move right before earnings and then sell off on earnings. So if this were to reverse on Monday, you know, personally, how I trade stuff is like this would be kind of like exhaustion. So if I get a pop over the high on Monday, I would maybe trade it up to maybe one of these moving averages with a spread. So this is just showing you like how I would look to trade. This is different from the class that I've been taking, but the market's just been taking a hit recently. How I would trade Microsoft like in this situation if I think this is exhausted. Number one, on Monday, I want to see like XLK and the QQQ be up, right? And and some of the indexes. So the Nasdaq is where a lot of tech is. I want to see the Nasdaq up. If on Monday the Nasdaq is up, the Qs are up, XLK is up. Once again, why am I saying no specific ETFs? Because if we go look at the weighting of XLK, what's in XLK? It's a XLK is an ETF that holds a ton of stocks, but what's weighted heavily? Microsoft and Apple. So if XLK is going up on Monday, Microsoft is likely to continue going up. Same thing with QQQ. That's what it said. A rising tide lifts all boats. So if we're looking at QQQ, where are the holdings? What are the top two weighted stocks in QQQ? Microsoft and Apple. And then Nvidia is a close third, right? So what if I'm coming in on Monday and I want to trade this because I think, hey, there's 3 down candles on Microsoft. Microsoft is still pretty strong, has an AI story. It tends to beat on its earnings. It hasn't released any bad news recently, like as far as I've been seeing the news. So it's selling off because everything else is selling off. But if NDX, NASDAQ, or the Qs, which is the ETF version of the index, and XLK are all up, chances are Microsoft is going to be up too, and then I'm going to be more confident that this is going to pop up and give me that trade that I want, right? And if I'm just day trading, I'm not looking for a massive move. I'm looking for Microsoft to come through this like 405.77. Let me see what the real high is. The real high is 405.48, so like 405.50. I'm looking for Microsoft to come above that. If it's below this area at the beginning of the day and I get a good entry coming above 405.50, I'm looking to hold on to that until we get to like 411.87, and then I'm going to sell half my position, if not the whole position, because of right now we have a lot of volatility. But I'm not going to be in that for a long move. I'm trying to get $6 of movement and then I'm out, right? I might even sell half the position at $3 of movement because of the volatility we've been getting lately. So I might sell half the position at like 408.50 and then try to keep the rest of the position until like 411.80, something around there. And then I'm out, right? So that's, and I would either take a call on this type of a trade, or I mean, I would buy a call on this type of a trade, or I would sell a put spread on this type of a trade. I've been liking my spreads a lot more lately because of the volatility. You could stay in a trade a little bit longer, but you get less of the upside. You got to take more contracts. But from, let's say Isaac, we're going to trade. I would take the closest expiration date on this one. And this new class that I've been taking has been really getting me to pay attention to like the open interest, right? To figure out if you're going to be able to get in and out of this trade quickly. There's plenty of open interest. Oh, we're on Apple, not Microsoft. Let's go to Microsoft. Do we have? It's kind of spotty. So if I'm trying to trade this, if it gets to 405.50, what's going to be at the money around that time is going to be like 405. So I would take that one that has decent open interest, and I always go 2 strike prices. So that one has decent open interest too, right? And that's probably going to be cheaper if that moves to 405. But that's how I would take this on like a reversal up if this comes up and breaks like 405.50, right?
Nice.
Just up to like 411. And I'm not really looking at like the price of the option. I'm more so looking at what the stock is doing. So like if I would set an alert halfway through and then set an alert at 411.50 that would tell me, hey, get ready to sell everything. If I don't put on a target price and just automate the entire thing, right? Once this trade is on. So for me, depending on how much I'm trying to risk, I would sell like around 10 of these contracts for my risk appetite. And that's how I would take that up. Same thing if you were just buying a put. You could just when this gets to around 405.50, you could just buy a put at around that 405 mark, but these are really expensive. These are $1,000 puts. So this is another reason why I trade spreads too. They're a little bit more scalable. You do have to have a margin account, but they're a little bit more scalable than buying puts on expensive stocks. To buy one contract on Microsoft is $1,200, $1,270, because this represents 100 shares. Or one contract on options is 100 shares. So 100 shares times 1270 is going to be at $1,270. Versus if you bought that spread, or not bought, but if you sold the spread, which is selling the 405 strike and then buying back the 400 strike, that's only $272. So let's say you only had $1,000 to put on the trade, you could buy 4 or 5 contracts of that, right? Versus one option will tax you for $1,200.
Got it.
Right? So you see how, Isaac, this is also a reason why you might want to be trading spreads instead of just the option. It could be the price. It's too, it's too pricey.
Right.
So buying one, $1,270 versus, hey, I don't have that type of cash, but I still want to capitalize on the upward movement of this stock. I could just buy a spread that's going to cost me $272. And if my budget is $1,000, let me just buy 4 of those, or not buy, sell 4 of those, because your primary instrument is you're selling a put, and then you're buying one to hedge yourself, so that way you don't have to pay that $1,270. But essentially, when you're selling a spread like this, if the price stays at like $399.12, let's say it opens up at $399.12, if the price stays here, then you're gonna most likely make money or break even, because time decay is on your side, and if it moves up, you're gonna make money, right? And that's if we bought it at $399. But if you look at where Microsoft is right now in the aftermarket, you go to a smaller time frame.
396.
Yeah, it's down. It's still going down.
Yeah, 396 on the side.
Yep. So I don't like that. I don't. That's what I'm saying. From a tech standpoint, I don't like that at all. That's why I only want to get it if it cracks here. If it opens below the close, right? And this is another this new class that I'm taking. The previous session close is very important to mark off. So like the close on Friday was $399.12. So I'll mark that. Call it PSC. So
Mr. Slurpee over there.
If this is the previous session close right here, and we're below that, and look right here, even in aftermarket, it came up to it and then bounced right back down. That's not a good sign if we're below the previous session close. That's more bearish, where Microsoft might continue to go down, or we're going to have a crazy volatile day like this big candle that broke the high and broke the low. This one too broke the high and broke the low. That's crazy volatility. It's hard to trade if you got one direction or the other, if it's going up and down on the same day, up and down on the same day, right? It's hard for anybody to win in that instance, because if you're betting on it to go up, it went up and then came back down. If you're betting on it to go down, like it's just kind of like it's too volatile to really play, unless you get the timing perfect. So if Microsoft opens below $399.12, and especially if it gets below that low, I'm not trading Microsoft on Monday at all. I don't care if it even comes above this after coming way down. I'm not trading Microsoft. That means it's going to be a volatile day, or the price is going to keep sinking. Best case scenario is like, hey, maybe if it if it comes below this low and pops back up, I'd rather short it, you know? So, same thing. If we look at the 5 minute, you see here, soon as it came up, it was going trailing below and came up. This would have been the perfect place to short. So if Microsoft for me opens up below 399.12 on Monday, if it gets a pop back up to that level, I'm more likely to short it than to take it long. And then if I wanted to short that, it'd be a different trade. So if Microsoft and here you see how it's at 397 right here, Isaac?
Yeah.
So it's currently at 397 in the aftermarket. You can't trade options in the aftermarket. You can only trade actual shares sometimes, depending on what type of stock it is and what your platform is. Or you can short shares, but you can't trade options in the aftermarket. So if we're at 397 right now in the aftermarket, if it opens up at 397, I am not going to short it at 397. I want to wait for it to bounce up to the 399 and then short it around this area, because that's where I'm going to get the best risk reward, right? If it keeps falling from 397, it might be exhausted. How much more is it going to fall? $1? And Microsoft doesn't usually move that much. So what I would want it to do is to go back up a little bit, right? And it's just showing me right here. Look at this resistance right here, where it's bouncing or falling off of this level, right? The previous session closed. So if in the morning it was bouncing up to 399, but then I'm seeing the NASDAQ is bearish on Monday, and I'm seeing the Qs are bearish on Monday, and I'm seeing XLK is bearish on Monday, I'm waiting for it to get this bounce, and then I'm going to short it once it gets high enough. And then ideally, I have more room for it to fall if I short it at 399 versus at 397.
Got it.
Right? So just catching it at an edge. It's kind of what I like to say, catching things at their edges. So the edge is like 399.12. That's where I want to do something with Microsoft if I'm going to be on a short range or on the short end. And same thing when I was saying from the breaking the high, right here, that's another edge. That's where I want to catch it if I want to swing it all the way up to 411 for the day, or something close to that amount, right? I'm going to catch it on the edge. I don't want things in the middle. I want them on the edges. I want them right here in terms of whatever I decide to do with something. Like I want it here or I want it here. If it's a little farther below there, then that's like, I may have gone too far. I want it at the edge. And if it's already...
And this is when you're selling or this is when you're buying?
Either. You want, because it gives you a better risk to reward ratio. If I'm shorting Microsoft, if it gets to 399, if it goes up to 400, I could cut it, right? Then that means I'm wrong. So, but that's a small risk, and this is giving me like a barrier. Like this is my thesis. If it gets back up to 399.12, and if we are in the morning, if it's below 399.12, and then let's say the first few candles pop up to 399.12, I want to short it right here, hoping that it's going to keep falling way back to where it did, right? And then if it doesn't, I got like a good, like, hey, if it gets up to 400, I'm cutting everything, right? I was wrong. I'm cutting it. That's a low risk. That's $1 risk versus giving me a potential reward of dropping down like from here at least to $2 to 397, which is the current aftermarket low. And then maybe it gives me a couple more dollars, but for a spread, if I get $4 of movement, that's going to hit my target, right? Same thing for most options. If you're buying a put right here, by the time if unless you're being greedy, by the time it gets to 397, 396, 395, you'll be close to your target if you got a 20 to 40% target. Right, Isaac?
Yes, sir.
From how you usually buy calls and whatnot. Like if you get that much movement, you're gonna be close to your target by then. And then that's why you should pick a target before. So like if I was shorting this at 399, and I'm just looking at price action now, we're like on Monday morning, this might be different. This might be at 394, 395, or like this might still be the low at 397. So really what I would be looking for is a short, and I'd be selling half of my position at 397 when we're at the session, when we're at the aftermarket low, and then maybe leaving a runner and then pulling up my stop to break even, where if it goes back up to 399, I cut, you know. So
Mm-hmm.
that's what I'm just saying, just catching anything at an edge, even Apple, that trade that I'm in right now, it's in my long term because it's a leap, but the reason why I bought it right here is because this 166 level that I've been talking about for a month or two, I've been waiting for it to get down there. And it's a good place for me to have a $2 risk, but a potentially $15 or more reward. No, $2 risk because I bought it at 160. I bought it around 160, that leap when it was around 166.50. So 166.50, I got $2.50, $3 of risk because I want to cut it at 163.75. So about $3 I'm risking potentially for $30 of upside, right? Because I'm hoping it gets back up to that 100% level again over the next year or so. So that's why I'm
Amazon.
hoping. Yep, go ahead.
I want to check out Amazon because I know I just purchased some Amazon because it got a little low, and I wanted to always put some in my portfolio. So I want to see what you think about Amazon right now.
So let me go look at a monthly chart first. How I would always examine a stock initially is looking at the monthly. Amazon is still relatively expensive, but it looks relatively strong in comparison to everything else that we were looking at, right? Especially like a Tesla. Amazon looks strong. Look at this uptrend. This just looks like a correction for right now. If you're looking at the month, or a price correction, but this might actually be healthy, kind of similar to this bar right here. You see?
Yes, sir.
This bar looks like this bar to a certain extent. That's a little
Yeah,
different. This is an outside bar, but like it looks like just a slight correction. But the uptrend overall on Amazon is still good for right now. Um, Looking at the weekly, right now this last bar looked crazy, right? For me though, this is
yeah.
this is kind of in no man's land still. Like I want to catch it at an edge. I want to catch it at 165.
That's what I did. I think I cut it at one. Let me tell you, one
No, ha-
65 or 164.50.
right? Yeah, but that's that. Why, DeAndre? This is
Mm.
what I'm looking at. Price action 160. What is this? 165.68. It bounced there once, twice, three times in the past, right? Mostly twice, but you have resistance right there, and these are monthly or weekly bars, right? So this was a weekly low twice, and it bounced off of it. So looking at that 165 and looking at that weekly moving average right there, if I were to try on Amazon, that's where I would try. And the reason why you would try right there is because you could maybe place a $2 stop. If it gets down to 162 or something, you could cut it. You're wrong, right? So you only lose a couple $100. And then if you're right, you got 165 up to 168. You got $22 to 2. So that's a 10-to-1 risk reward ratio. That's what I would be looking at. But I also, so
Yeah.
go ahead.
You said 168, 188.
188 is the high. 188. Well,
Yeah.
no, the high is actually 189. So you got a risk to reward ratio. Let's say if you bought this around 165.68 or 166 and you placed your stop at like 163 ish, you got like a $2 risk. If you're buying 100 shares, that's $200 you're risking. But if this goes your direction and gets back up to that 100%, which would be like at least your target, which would be around 189, like you could be making $20 for risking $2. So that's a 10-to-1 risk reward ratio. Those are the sort of trades that I'm willing to risk my capital on, like where I'm risking $1 to make 10. I don't want to catch this in the middle, right? I don't have any boundaries here. I don't have any support or resistance, right? I don't have, so that's why I'm not buying Amazon in this middle. I want to wait till it catches an edge. Right here, I see a decent edge right here. I see 2 points where it's bouncing off this 165.68. So that's where I'm going to take the risk. Same thing, some real support for Amazon is at 125 ish. 1, 2, 3, 4, 5. If you look at the close right there, and you'll see some wiggle. That's why I say give it some room for you to be wrong because it might bounce. This is what I'm hoping Apple does right now. You see how it kind of wiggled down but then came right back up?
Mm-hmm.
This is what I'm hoping Apple does. And I'll give it some room to be wrong because, look, a lot of people were probably stopped out right here. But if you would have held on a little bit longer, you would have been in it.
It's like that red candle right now. Almost like that red candle.
Yeah.
It's down, and it might just pop back up.
It just depends on where your resistance is. Sometimes these resistances, like they'll sell off to get everybody out, and then look, it popped right back up, and it was off to the races right there. So that's why I've actually been like not having my stops be extremely close. Like, and even this, I don't have it programmed in. I just have it to watch it. But I feel like Apple is kind of going to do the same thing where they know a lot of people are waiting to be stopped out right here. And hopefully it pops again and comes back up. But I'm going to give it a few dollars. I'm going to risk a couple $100 and be down a few $100 to see if it'll pop back up. But if it starts getting below that 163-ish, 163.50, 163.75, that's where I'm going to get nervous and I'm probably going to cut the cord.
Got it.
Right. But I'm just looking at where it pops. It's been popping out 166 a lot. Right there in the past and the history. Right there. And it used to be resistance. So right here, that's a really important level. It looks like is that 166 level. So
yeah, I purchased that stock as a long term now. I just wanted to add it to my portfolio.
Now let's look at Nvidia.
Oh man.
Right?
I lost money on that. I'm hoping for it to pop up. I got like 30 days, but it ain't looking good.
Where do you see my alert is right now on Nvidia?
Let's see here. You got it low, I think, isn't it?
Where is it?
724.
No, my alert is right here.
Oh, okay, 663.
Why is it there?
Because it's at a high. Or not actually. Why is it? That's a good question.
We're on a weekly chart right now.
Okay.
I got 2 weekly lows right there, bouncing right off of that line. And the 34 moving average on the weekly chart is probably going to be there if it kind of chills there for a minute. So for me, if I'm going to risk on Nvidia right now, especially when the market is weak, if I'm waiting for it to pop, like I told you, right now I'm more bearish, but that's my safer price to get in. It's going to be more discounted from its all-time high. So it'll be close to like 35% off if we're talking about a discounted stock. This week, that was really good support, was 663.50. This week, that was really good support at 663.50, where as soon as it touched that, the buyers stepped in and bounced this right back up, right? So, and then if it comes down here, it also gives me a good risk to reward. I could buy it here at 663.50 and potentially swing it all the way back up to this 772 or keep it until it gets back up to like 970, right? This would be target number 1 for me. If I bought a couple of leaps or if I bought a couple of spreads, this would be target number 1. Target or if I bought a call, target number 2 would be around the high right here. And then my stop loss, I would put it right underneath this moving average, which is around 643. I would put it at like 640. Because if it drops a little bit lower than that, then I'm wrong. If you wanted to give it more wiggle, you could put it right underneath this fib level at 614.60. So really what you're getting, like if I do a price level, your risk is the area between this yellow line and this green line, and your reward is potentially this yellow line to this white line or this yellow line to this white line if you leave a runner. So you have a higher reward than your risk is. There's no reason to be taking a trade in the middle of all of these places where you don't have a good risk to reward ratio. Does that make sense?
That does make sense.
Right?
That does actually make sense.
So you're limiting your risk. Hey, if it goes below this number, I'm out. I'm wrong, right? We're not going to be right all the time. But if it pops up, I got all of this area to be right and all of this money to make. And these are the places I'm going to be looking to sell it.
I need 2 weeks for it to pop up to 940. And if it doesn't do that, SOL.
What was your determined risk when you got into the trade?
It was up there. You know what? I did that trade about almost a good month ago, so I wouldn't even know. I forget.
See, that's my thing. I even have a book now. Like,
yeah,
you need, before you even enter a trade, you need to know what your risk and reward numbers are before you even decide to buy anything. I told you mine on Apple. I've been telling you guys this for a month. My risk, I wanted to get it at 166, and if it drops below 164, I'm nervous. I'm probably going to cut it. Right? And then if it gets closer to that 199, back up to the all-time high, I'm getting ready to sell.
Mm-hmm. Yeah, that's why I do my stop losses.
And then all of your emotions, you don't have any emotions. It's just a transaction. This is what I said I was gonna do. I'm gonna buy it around 166. I'm gonna sell it if it drops below 164 or 163, and I'm gonna get close to selling a part of my position if it gets in that 190 range. That is the game plan that we're gonna follow. And I'm going to try and keep my emotions out of it and try to keep it as objective as possible. But you should know that before you enter a trade, especially if you're trading and not long-term investing. If you are entering a trade, you should know what your risk to reward parameters are before you click that send button.
Gentlemen, I'm out to be out. I appreciate y'all as always, and I'll see y'all next Sunday.
Yes, sir.
Okay.
All right. Isaac, while you still on, you got any questions about the platform? I wanted to start doing this. Anything you want to know about indicators, how to mark up a chart, anything like that?
Yeah, let's do a stop loss one more time because I think I got to see how it is on my platform, but I just want to see how you do it again one more time.
Okay, so a stop loss, just for if anybody's listening on YouTube, is an automated way to sell or buy shares or options if you want to get out of a trade. Let's say if you're not watching it, right? So, so a stop loss for what? For options or for shares?
Say that one more time. I'm sorry.
A stop loss for options or for shares?
Well, I believe I will know how to do options. Let's do options here.
Okay, for a call or a spread?
Let's do a call.
So let's say it's an NVIDIA call, right? What's your expiration date on your NVIDIA call?
Let me go to it real quick. So I got it at 9:45. Expires in 26 days, so May 24th.
So if we got, and what's your strike price?
9:45.
Yeah, bro, I would have cut this by now. Just FYI.
Yeah, I know. I should have been cut it.
So Right? So this would be buying a call. If you click the ask column on
Mm-hmm.
your option ladder, this is called an option ladder. Like, oh wait, but you're on the call side. We're on the put side.
Yeah, call.
So this would be buying a call on this side because this is the call side. So if I were first getting into a trade and I wanted to do a stop while I am entering the trade to buy this particular call, I would right click the ask, go to buy custom, and then I would go buy with stop.
Mm-hmm.
Right? You see how I did that? So if you were buying this at 1470, you would be
Mm-hmm.
entering this trade here. I always put my stops on good till canceled. That's what GTC means.
Mm-hmm.
And so if you were only willing to lose, what, 20%? Let's say your stop loss was 20% of the 1470. 1470 times 0.8 would be 11.76. So I will put this at 11.76. So if the value of this option drops to 11.76, it will automatically sell.
Okay.
Right? If you are already in a trade, right?
Let me see. I want to look at that and see real quick.
So let's say, so right now you're already in a trade. So you're not going to do this simultaneously. So what you would do is you would right click that. You could sell custom with stop. Actually, hold on. You actually would just need to do sell. So sell single, right? And let's say your stop loss, you already own this, right? You already own this call right here. And it's right now it's worth 1470. If I wanted my stop loss to be at 1176, which was our 20%, like we just said, you make sure the order, this category, you put stop here, good till cancel, and that's how you would put a stop in for something that you already have. And then how many contracts you have, right? So if you only have one contract, you keep that there. Go ahead.
It's pretty much like if I'm closing out the trade, then right?
Yes.
I'm just adding already on
Except
there.
it's automated,
Okay.
right?
That's
So
automated, and then I just got to make sure I put that GTC so it stays there.
yes, and this will only be valid when the market is open, though, because this is for options. And so let's say you get a gap up or a gap down in the middle of the night and it blows past your stop, and in the morning you wake up, this is at 10:50. It's just going to, once 6:30, we're on the West Coast, 6:30 hits, it's going to automatically get you out for a lower price than the stop because it dropped below this price during the aftermarket. You feel me?
Got it.
So if this happens, if Nvidia tanks in the middle of the night, you're out of luck until the market opens. Specifically as it relates to options, you would have to do something else. Like if you wanted to hedge, you would have to short the shares or something in the middle of the night to hedge. If some big news came out on Nvidia in the middle of the night, like China invades Taiwan or something like that, right? You would have to go short the shares because that's the only thing that you would be able to trade in the aftermarket hours versus the options. The options are only going to be open when the market is open. But
yeah, this trade, I mean, it's a YOLO trade at this point. It's just hope that it goes up a little bit more for me to cut my losses. Because already my losses is already at damn near maximum. So it's like it still got a few more days for it to see if it'll pop, but it ain't looking too good on
yeah.
this stock.
So that's what I would recommend. I would recommend for anyone like really starting to learn how to trade. Keep a stop on everything because
Absolutely.
it stops you from getting emotional. If you said to yourself at the beginning of the trade, "I'm not willing to risk more than 20%, 10%, 25%, 40%, whatever it is," if you keep a stop on, it'll keep you from getting emotional from when it hits that particular price. So if you're at work and you can't check it and the stock is dropping and you got that on, it'll just get you out. And then you'll just take your paper cut, you'll take your 20% loss or whatever your loss was that you determine. Me, what I've been doing recently is I've been setting alerts. So it'll tell me to watch it. Like, hey, like Apple, I know I have an alert on Apple at 164. If it triggers 164, I'm going to be watching it all day. And then I might do another alert and put it at 139.75, or I mean 163.75. If I put it at 163.75 after this one triggers, then maybe I'll watch it on a 5 minute chart to see if it looks like it's going to be tanking. And if it looks like it's holding up, I might hold it for a little bit longer. But right now, if it gets below this low right there, I'm worried. I'll just take my $200, $300 loss and wait for another opportunity to get back in. But my whole goal is to preserve capital. You got to preserve your capital, right? If it's going to lose, don't lose big. Try to win big. Try to keep your losses short. So that's why for me, I don't have a stop loss on for Apple for the call that I purchased, but I do have an alert that tells me, hey, if this gets below 164, go watch it, bro.
Got it.
Right, and then I'll just wait. Then I'll wait again. I know my next entry into Apple is going to be closer down here. I'll just wait and see if it falls to like 130s. You know. Anything
Okay.
else? Anything else about the platform?
Not at this moment.
All right. One thing I did want to show you too, if you got an open position, like this is my open Apple position right here, my call, you could right click this, and if you're on your app on your phone, you can click the checkbox and you can just create a closing order to get out really quickly. That's the quickest way to get out.
Okay, yeah, we got something similar to that
Yeah.
too.
I'm just talking about like if you want to get out, because I feel like this is why I recommend doing a lot of paper trading. It's not necessarily, even paper trading is not necessarily for the strategy, but more so like how to get in and out of a trade really quickly. Because sometimes a stock is dropping at the speed of light, right? And like if you're fumbling around with how to get out, or the price keeps moving down and you're trying to get out, you need to know how to quickly get in and out of your trade. So it's like, bam, create closing order. And then I can get out right away, right? Or whatever I am, or this call, this Google call, create closing order. Same thing on your phone. And then it's automatically going to put it there for me, and I can toggle the price around a little bit if I'm not just doing a sell stop, but just being able to get in and get out right away. And even the same thing for getting into your trades. If you're afraid you're going to miss something, because sometimes that moves really quickly too. So if, what do we say, Microsoft? If we're already talking about trades on Microsoft and you kind of figured out your game plan for whatever it's going to do, just have your trades already ready. Like on Microsoft, we're on a month chart. Like if we go to a day chart, and I know I want to take this long. Let's say if I want to buy a call, if it hits 405.50, bro, just program that in. You know, hey, this is going to be the strike that's closer to the money. If that's what you're looking at, it's like your delta to be around 50. Like, oh, we're on the call side though. So it's going to be 405. We know that when this stock price gets to 405, this is going to move into the money. So it's going to probably be around $1,200 at that time, maybe $1,000. So man, I'm already just keep it and just save it. So if you know you want to buy two, put two here, and shoot, and then save it. So then in your saved orders, this is also on your phone. If you go into your orders tab, there's a saved orders column. Now, if I want to go and buy two calls of Microsoft, I just got to create a duplicate order. I already know the strike price. I already got it up here, right? And it's just easier for me to get in quickly, right? Same thing for a spread. I'm going to be on the put side if when we talked about buying or selling a put spread to bet on this to go up too. Bam. If I know that's going to be my trade, and I know at the time it's probably going to be about $1.50, and I want to take $2,000 worth of this, and I want to sell 12, bam, I'm just gonna save that, right? So then
Mm-hmm.
when it comes up, if you look on your phone, if you're on your computer or your phone, when you save a trade, it's gonna be in your saved trades and your orders, your saved orders, and you can just create duplicate order, and I'm in a trade within seconds, right? I might even on my phone if I'm not on my computer. You know how you could have the trade window up. Like
Yeah.
I'm gonna click this unlock box to make sure that the current price is there, and like I'm already like waiting for it to hit my price where all I got to do is click the send button. So it's not me doing any thinking about what my orders are going to be or where I'm going to get in. The only thing that I might be looking at that I'm learning from this new class that I'm taking is like I know for a spread, I want this to be as high as possible, right? Because I'm getting a credit for this.
Mm-hmm.
So I might push this up 5 cents or something like that if I think the price is going to sink a little lower. Or if I'm buying this call right here and you see the spread difference is 25 cents, I want to get like if you're just slapping the ask and buying this for $7.15, I want to get as close to 690 as possible, right?
Mm-hmm.
I want to get it at what people are like. This is the expensive side. You'll get in every time here. Here, if I put 690, 695, I'm gonna get this at a lower price, but that's gonna mean that I'm gonna have more room for it to wiggle. We could have bought the same exact option at the same exact time, but if you get it for 715 and I get it for 695, right? I bought it for a less expensive price. I'm going to have more room for it to wiggle than you, even though we bought the same exact instrument. You feel me?
Right.
So you also want to look at that. What's the difference between the spread? So if I were buying this one here, I want to get as close to 1190 as possible rather than buying it for 1220. So maybe
Correct.
1195. And looking at the last price it was sold for, it looks like the action is around 1210, but that's 10 cents lower than 1220. So it looks like most of these calls are being purchased for 1210. So I am not going to buy this for 1220. I would be trying to get this for like 1205, 1210, right? Cuz that's what if I want to get in right now, I want to get it for 1210 cuz that's where it looks like it's trading at, right? If you look at
Mm-hmm.
the last column. So if this isn't in your account, make sure you had the last, the open interest, the bid, and the ask. I like the delta up too in terms of like what are the most important. But that's what I'm going to be looking at. So if I'm buying this, I want to get it closer to the bid versus the ask. If I am selling this, let's say you're already in this trade, I want to sell it closer to the ask than the bid, right?
Mm-hmm.
If you're trying to get out the trade. If you already own
Yeah.
this call,
More. Right.
exactly. You want to sell it for the higher price rather than the lower
Mm-hmm.
price. So this is order execution that's really important for getting in and out of the trade. If you lose 10 to 15 cents when you get out, you just lost some of your profits.
Yeah.
Same thing when you get in. If you could have got this for 10 to 15 cents lower, you get more profit, right? Less risk on the trade. So
Yes, sir.
from the options ladder standpoint, also watch when you're getting into a trade, like what is this last? What is the bid? You ideally want to get filled between the bid and the last if you can, but not at the highest price of the ask. So
Yes,
when
sir.
I'm down here, that's what I'm going to be fiddling around with is, hey, what do these numbers look like? Where are they moving to? And I want to be as close to this number and these number and this number as possible, but I don't want to be at the ask. I don't want to chase it. I'd rather not trade it than chase it, and then it only goes up so much and comes back down. The lower price you get it for, the more of a profit you're going to get when you're buying calls, right?
Absolutely.
Yeah.
Yeah.
All right, that's it for today.
All right, brother, man.
You
Appreciate
got,
the gems.
yes, sir. Till next time. Sunday
Yes, sir.
service. This is my way of giving back to the community. My
Hey,
community.
man,
Yep.
we appreciate it.
Yeah. All right, brother. Next time.
All right,
All right.
peace.